Hello, I'm David Webster. I'm a partner in the Corporate and Commercial Department here at Russell-Cooke, and I'm joined by my colleague Mark, who's a partner in our dispute resolution team. This video is going to look at business disputes, particularly how to avoid them arising, and if they do arise, how to limit the damage when they do. So this is going to be an introductory video, and will be followed on by some more videos looking in a little bit more detail at certain types of disputes. So for the purposes of this introduction, I thought a good place to begin would be by looking at the three broad categories of disputes which arise. And this is just a grouping we've come up with. It's not sort of fixed or rigid, but it helps to sort of conceptualise things. The first is internal disputes. So these are disputes between people who are part of the business in some way. Commonly it's directors and shareholders, but it could be wider groups such as employees or contractors. And what we find in practice is a particularly fertile ground for disputes is between founders of companies, and particularly startups. And those disputes can arise for a variety of reasons, but common trends are disagreements about the strategic direction of the business, disputes about how people should be participating in the income and capital of the business, and also disagreements about whether, to be blunt, everyone is pulling their weight in the respective contributions people are making to the business. So in the case of Streamser, using our example that's flowed through these startup guides, we could find that there's a dispute because when Han took equity, she and Gina didn't specifically agree the terms on which her equity entitlements would crystallise, and indeed that is something that does happen a surprising amount in practice. So having looked at internal disputes, the second category of disputes that we've identified is business disputes. And Mark, would you like to say a little bit about those?
Yes, any business engaging in any kind of activity, economic activity, will be dealing with third parties, and those can give rise to disputes. They can range from simple matters like non-payments of debts through to more serious issues like service delivery, so whether you're the recipient of the service or delivering the service, or alternatively goods. So those are relatively routine types of disputes on a day-to-day basis. You then also have issues for the company to try and maintain its rights and entitlements. So for example, intellectual property issues that will come up, and then trying to protect those. Well, you also can have those much more serious issues that arise which create real problems for the business. So things like responding to negligence or complete parties repudiating contracts, or alternatively fraud.
And then the third category in this broad sort of categorisation we've come up with is government and regulatory disputes. Now, for many businesses, if you operate in a regulated sector, particularly something like financial services, for example, this is going to be a key concern and probably your main risk area. But for the majority of businesses that don't operate in a regulated sector, this might not seem quite so relevant. However, it is an area that does need to be monitored. Any business can end up in a dispute with, for example, HMRC over its tax returns, or the ICO, for example, if there's allegations that it's not processing personal data correctly or that there's been a data breach. What we'll talk about now is some steps that businesses can take to limit the impact of disputes, both in terms of stopping those disputes arising in the first place, but also mitigating the harm when they do. And I think those steps fall broadly into two areas. And Mark, will you talk a little bit about some of the practical steps businesses can take?
So the first step that they can try and take is hedge their risk and spread it with other people. So the main way of doing that will be through insurance. So in particular, particular types of insurance are available for companies. So the main one that will be relevant for most managers of a business will be directors and officers insurance, which can then help meet any claims that are made against the directors. There are other insurance products that will be available on the market, so that will then give someone else responsibility to help meet any claims if they arise. And then I think the second category that a business can look at is how they're going to respond themselves to any dispute that arises. So that both involves adopting a sensible approach and getting the right advice and adopting the right strategy in response to a dispute, but then also being able to evidence their position. So a common issue that comes up for businesses is that they don't have adequate document records. Now, what that doesn't mean is you need to be a slave to process and unnecessarily add to your administrative burden, but it is important where there are risk elements to have proper records of decision making. So that can be something simple like making sure emails are retained, but there'll be other areas where it's not so obvious. So for example, mobile phones, having those backed up if people are if they are a particularly important part of people's decision making and business approach.
Yeah, and I think you mentioned there the sort of strategic decision making about approaching disputes, and that's something that we'll be talking about in one of the follow-up videos. But I mentioned at the start of this section that there's practical and legal steps that businesses can take. Mark's spoken about some of the practical steps. In terms of some of the legal steps, it's all quite basic really. It's really about making sure you've got your key agreements and understandings with both people internally and people externally properly documented, and making sure you've got appropriate processes and procedures in place so that you don't run into trouble in your interactions with regulators and governmental bodies. So that's taking proper professional advice on the preparation of accounts and tax returns. A shareholders agreement is an obvious example of a legal document which can help. Although I think from experience, one common mistake a lot of people make is that they just assume that having a shareholders agreement in place will be very helpful and will deal with any issues that arise. And it won't necessarily. Shareholders agreements are most successful where they reflect an agreement that's actually been reached by the parties after having some difficult discussions about who is contributing what to the business and who should get what out of it right at the outset.
I think one other issue with shareholders agreements where disputes arise is that quite often they are negotiated very carefully and then put in a drawer somewhere and not looked at for years at a time, and then they only go back to them when a dispute has already arisen. Whereas the purpose of having these documents is to help manage the process to hopefully avoid a dispute arising.
Yeah, absolutely. And I think for a lot of the things we've run through there, they may be unattractive to businesses because there's a certain cost, both financially in terms of taking the professional advice needed to put those steps in place, and also in terms of business time and resource. But I think it's probably best to view those costs as a sort of form of informal insurance. And those steps won't definitively stop disputes arising, but they will help, and they will certainly help mitigate the risks and the damage that's caused if disputes do occur.
If you have any questions arising out of this video, please contact the corporate or dispute teams at Russell-Cooke.